Traders, welcome back to Simply Forex. If you want to improve as a trader, then you're definitely in the right place. As you can see, guys, today I've got a special guest. So let me briefly introduce him. So his name is Marcus. He is responsible for launching Blueberry Funded globally. So we thought we'd get him on and have a chat because we've recently partnered with Blueberry Funding. So yeah, what a good time to have Marcus on and discuss, how everything's going. So Marcus, welcome. How are you?
Pleasure to be here. Thanks for having me on, Tom. Going well, thanks.
Yeah, good. I imagine you're quite a busy man at the moment with the launch of, Blueberry Funded, and how's it all going?
Yeah, really strong. The community response has been amazing and definitely bigger than what we initially anticipated. So it's keeping me on my toes and keeping me quite busy. So yeah, lots of good things going on, sort of keeping up with the pace and also building a lot of exciting new things for the long term as well. So yeah, it's been amazing. With our first 2 months of going live, and yeah, looking forward to continuing that into the future.
Brilliant. And those of you guys that don't know what Blueberry Funded is, it's basically a company, guys, that are offering funded challenges. And we'll delve a little bit deeper into those challenges. But you can get funding of up to $200,000. Is that right, Marcus?
Our max account size is 200,000, but our max allocation is $400,000. So you can split that between as many accounts, as you wish. And we offer long-term scaling plans, for successful traders over the long term of up to $2 million in simulated capital. So lots of things on offer, to say the
Yeah,
least.
yeah, sure. And yeah, so guys, this will be a really interesting interview. If you are looking for funding, guys, as I know a lot of our viewers are, so stay till the end, and we've also got a discount for you right now as well on any of the funded challenges. All right. So I guess we should start really, Marcus, with the prop firm industry in general. How do you see that space, and why did BFF think this was a good opportunity to enter that space?
Yeah, it's a good question. The prop firm industry is still, quite new in theory when you compare it to like retail brokerage, all lots of other kinds of businesses. So I think it's still going through quite a big growth phase, and there's a lot of teething issues when that happens. And I think what we've seen, over the last year is, there's been a lot of mess, platforms going down, firms blowing up, a bit of a wild west of sorts. So essentially behind Blueberry Funded. So my background before it, I come from the brokerage space, where I did a lot of infrastructure and platform work for prop firms, and then did technology, white labeling, and consulting. And I think from what I saw there is such a large quantity of firms. Like I must have worked with over 40 firms in the space of 2 years, and there's such a large quantity of firms that are out there. But I think the emphasis needed to be on quality, and I think it was a question of this space is growing, but it does need to be more sustainable for the long term. And, what's the best vehicle to do that? And something I was really big on for a long time was this idea of broker-backed prop firms. I think there's things that prop firms do really well. I think it's been such a great, young, energetic crowd of people that's helped build the industry. People with trading community backgrounds and things like that. But I think when it comes to trading infrastructure, liquidity, compliance, regulation, it's not really in their wheelhouse. Meanwhile, a lot of established brokers have all of that infrastructure and knowledge ready to go. So I kind of saw the apt vehicle for long-term progression in the prop space, being a broker-backed prop firm. And it's something I was sort of harking on about for a long time. I'd known the guys at Blueberry Markets, for quite a while. They've been around for over 8 years and serviced over 50,000 traders globally. And whilst they delved into the prop space previously on some infrastructure and other things, they were very very keen to dive directly in. And we had a few chats, and yeah, I think we thought that this product was something the industry needed, but also something that could be grown upon, and we could bring a lot of expertise to a prop firm. And thus Blueberry Funded was born, and we've been alive about 2 months now after that.
Yeah, okay. Yeah, and I couldn't agree more with the prop firm space. We have a lot of subscribers, viewers who used prop firms previously, had problems with payouts, or companies just going bust, or they had to change charting platform midway through. All these things are such, off-putting, and don't put the prop firm industry in a good light. And to have backing of a broker, right, and a well-respected broker like Blueberry Markets, it gives such security to the trader, and puts their mind at rest that they're going to have no problems with charting, payouts, and things like spread as well. I think some of the prop firms took advantage of, like spread on some of their trading. So, yeah, couldn't agree more. Broker-backed prop firms, definitely the way to go. And for value for our clients, our subscribers, that's a prop firm company that we wanted to partner with, one that wasn't going anywhere. So yeah, couldn't agree more with you, Marcus, there. And what was so, Blueberry funded, new to this space, and what are some of the challenges and opportunities that have come about? I know you've only been live for a couple of months, but what are some of the challenges and opportunities you've found so far?
So, look, I think the challenge is changing the narrative. I think that whilst we've seen a lot of prop firms blow up and been in a messy position, over the last 12 months, I think the idea of I think there's still a narrative in the space of it being really a simulated game-like environment, and I think the gamification of prop firms is a good thing to an extent. Like, you have your dashboard, you can see your risk levels, you have to trade within these parameters, and has a very large educational component. I think where the problem is that the gamification has been taken very far by a lot of firms in what I call the race to the bottom. When it comes to high leverage, cheap cost, running it like an e-commerce business, 80% off, buy one, get one free. And that narrative's been driven so hard that I think to come in with a message of sustainability has been a bit challenging, because, we don't sugarcoat it. Like, we do have some stricter parameters than a lot of other prop firms. We don't make it easy, because at the end of the day, trading isn't easy. And, the benefit for us being able to get the best traders out there and sustain for the long term is to, make it strict to make sure that traders are trading in a sustainable, risk-adjusted fashion. So that's been hard changing the narrative, but it's been interesting because, people come on the Discord, or people message me and they'll say, like, change this, make it easier, give us, all of this stuff. And I'll say our position, which is, we're strict, but we take things seriously, as traders should as well. So, and it's good to see people then respond to that saying, look, that's a good answer. That's a solid answer, because, it's good to see people not just, give in to making it a game or an e-commerce business and racing to the bottom, but, we sort of, stand ground, and we believe in this model, and it's not something we just built overnight and threw together. We put a lot of data analysis, risk analysis into it to ensure that this can be sustainable for the traders, sustainable for us. The data that we're gathering from our funded traders is of value for us to use in other upstream trading activities and other things, to make this work for the long term and really give that long-term value. But yeah, it's tough to do that when I think there's a lot of other firms that are continue racing to the bottom. But we believe that the way we operate, the parameters we have, and the challenges, and the other things that we're working on for the long term are what's gonna keep us around longer than a lot of other people out there.
Yeah, definitely. And the process structure you talk about, the e-commerce structure that a lot of the prop firms have adopted, has failed, right? They're not backed, they don't have the capital to deal with it, and it's very, here today, gone tomorrow type, process for them. So yeah,
it's a tough one, Tom. I think that because the things that I always say, the things that make this space great also make it bad at the same time. And when I initially saw prop firms get big, like the e-commerce user experience of it, I really liked. It's, you go to a cart, you select a product, you can see the FAQs, you purchase. It's very user friendly, and even the dashboard and the parameters. It's such a good flow that brokerage, it's a different product, but and it has different requirements, obviously. But compared to that, it was so user friendly. But then on the flip side of the coin, when you see people treat it only as an e-commerce business, it doesn't make a lot of sense. I always joke with people, it's you'll see like buy one get one free promotions, and that doesn't make any sense to me from a risk perspective, because it's literally saying like we're willing to take on twice the risk for the same amount of sales income from that. Which is weird, because then you see firms talk to their community saying, oh, we believe in good risk management and sound trading, and I'm like, you just like change your risk reward structure like overnight. Like, that wouldn't fly if you were a trader, but the way you're running your business isn't even sound risk management from like an e-commerce financial perspective. So it is kind of funny in that sense, but I completely agree. It's like I think too much of a good thing, it's a good user experience, but when you forget about the risk side and the trading side, and required upstream, capital, if you want to manage strategies and things like that, then it's a ticking time bomb. And, we've seen that happen in the past. And look, there's a bit less of it, but we still see it going on with firms today. So look, we're here to change the narrative. Sustainability is our number one thing. We're not looking to drop prices or just change our challenges to make them more appealing. Like, we could have done that on launch, and I'm sure we would have brought on a ton of traders and made a few quick dollars, but it's not the right thing by people for the long term ultimately. So sustainability first is sort of our motto that we're funded.
And I think traders are beginning to realize that themselves. They're intelligent bunch, the clients that you have, and they realize sustainability is more important than quick gains, right? There's no longevity in it. So yeah, I think, that viewpoint in the market is changing to sustainability. So yeah, totally agree, Marcus, with that. Now you've touched on a few points, why traders should, go for Blueberry funded. And, what would you say makes you different? Obviously, we have touched on a few points, but if you'd just like to elaborate on that, Marcus, why Blueberry funded? Why is it a great choice for traders to come and get funded accounts?
Yeah, and I guess I'm harking back to the same point. I'll quickly add sustainability. Obviously, that's our main goal. I think there may be a lot of firms out there that can give you some great conditions and parameters, might benefit you in the short term. You might even get a payout, but your simulated capital and your allocation is under threat in the long term. So you might pass the challenge because it's easy, but then your access to that funded account isn't going to be there in 6 months. So that's the advantage of going with us, is our mission and commitment to sustainability. But I think for more like immediate or like the direct benefits of trading with us, I mean, obviously being backed onto the Blueberry Markets Group's infrastructure, trading platforms, gives traders a very big advantage. In that, we sort of have that direct control and access to the liquidity stack, some top tier liquidity providers, and that's reflected in the trading conditions. We've recently seen some, online tests that have been done, and, we've come out on top when it comes to, NASDAQ 100, like Dow Jones 30, and like gold spreads as well. So some of the most traded instruments in the prop space, we're leading the industry with spreads, execution, and minimal slippage. So like the direct value for traders is there as well. And the important thing about that is that, like I said before, I think people think because it's simulated capital that the whole thing's simulated and it's all the game. But ultimately, whilst your capital is simulated, the conditions that we give people and how we treat their trading is as real as possible. Because ultimately, I think if we do want to make use of strategies or use them in other areas, of the business in the live market, that they have to reflect, the live market as much as possible. People come to me and say, make it swap free, give us zero commission, reduce the spreads like this prop firm. And I could say, well, that's all well and good. I'm sure that a lot of firms can do that, but ultimately that's a red flag for me, because they're pretty much giving you conditions that are better than the real market. So how could they ever make use of your strategies or the signals and data, for your trading ultimately? So that's sort of the thing where I think we are asking a lot of traders, like sometimes, and we get that. But the market and trading asks a lot of traders too, because we really believe that sort of adjusting the mindset and the narrative is going to reward traders, the firm, and really everyone in the long term. So yeah, I would say the trading conditions and that access to like as close to live market as we can get it is a big advantage to trading with a prop firm on simulated capital, and that's what we offer with Blueberry Funded.
Yeah. And guys, right now, if you use code Simply25, you can get 25% off any Blueberry funded challenge right now. So go check that out. You can use the link below. Marcus, we've got a few more questions, so don't go anywhere. Yeah, I guess we need to, what's really important to a lot of traders is, the criteria of the challenges. So drawdowns, profits, target profits, payouts, the frequency of payouts, time scale, all of these types of things. So if you could just sort of touch on that as well. And I've also understand you've got step 1, step 2, and rapid. So if we could just go into a little detail about those markers, so that our community has all the information it needs on your challenges.
Yeah, sure. So we offer 3 kinds of challenges. We have 1-step, 2-step, and the rapid challenge. So our 2-step challenge, that's with a 5% daily drawdown, 10% max, with a 10% profit target in stage 1. In stage 2, that goes down to a 5% target. And then once you're funded and on all our challenges, you can get your payout within 14 days of being funded. Our payout time is sub 2 business days right now for checks that we do and then sending the funds out to clients. Our one-step challenge operates a bit differently. The main sort of difference being the leverage. So we offer 1 to 50 on Forex on our 2-step. On our 1-step, it's 1 to 30. The drawdowns are different as well. We have 4% daily and 6% total. And obviously only has 1 stage, so it's a faster track to getting funded.
Yeah.
And on top of that, our commitment to sort of understanding that need for fast track funding. We don't do instant funding. It's something I've always seen some compliance issues with, and we've gotten legal advice speaking to that. So, but we understand it's something that I think traders like the challenge of. It's something that they want to get a fast track to being funded. So that's why we built the rapid challenge. So that works a bit differently. So that has a 4 and 6% drawdown levels and 10% profit target. Sorry, my bad. It's actually a 5% profit target on that on a 1-phase challenge, which is quite rare.
Yeah.
And essentially, it comes with a 7-day time limit from when you place your first trade. Now, once you're funded, operates just like the other accounts. It has 1 to 30 leverage on FX, just like the 1-step challenge, and 14 days until you can get your payout. So yeah, that's something that we've sort of done to cater to that need that we've seen traders have, for fast track funding. So that's kind of the differences in a nutshell between our challenges. We have a variety of rules. Like I said, we treat trading very seriously. So we have a lot of things in place for sustainability and to protect traders as well, to make sure they're trading in a very risk managed way. So people can definitely check out our FAQs or our outline of evaluation on the website, which goes into more detail, which we recommend all traders do to understand all the rules and what we're after from good traders over the long term.
Yeah, sure. So yeah, as Marcus said, guys, if you want to know all the details of all of the funded challenges, then please check out the website blueberryfunded.com. Also, Marcus, so we need to talk. We sort of talked about, you launching BFF into the market, the prop face space in general, and why we should choose BFF, and some of the challenges and opportunities as well. But let's now think towards the future of this space. So, how do you see the future of the prop firm industry going? Obviously, you don't have a crystal ball, but how do you see it going, and how BFF will function in this space?
Yeah, so I mean, the elephant in the room is always regulation. People always bring it up, will it get regulated? And I think people, there's a bit of fear mongering around it. I mean, I see regulation as a good thing. I don't think it's going to change the face of the industry quite a lot. I think a lot of people can get access to regulation if they know how to do it. I know with our background in compliance and different regulatory bodies globally, Blueberry Markets and Blueberry Funded, by connection to that, has options and things that we're always looking into for that possibility of regulation. So that's a big one people always talk about in the industry. But I think the other thing that we're really going to see, and it's like I said before, we see this race to the bottom happening. And whilst I think the peak of it may have been earlier this year with a lot of firms blowing up, it is still very much in progress. And so and it's annoying because I think people come in with great intentions. I don't think people, start the firms with aims of, blowing up or it being a scam or anything. I think they just come in thinking, again, it's an e-commerce business and it's a lot easier than it really is. And so I think we are going to see a lot more firms blow up, or at least we're going to see a move to stricter challenge parameters, with the aim of sustainability, which is something we wanted to do, right from the beginning, because, we believe that, I've always said you can always make conditions and parameters, easier for people. If you understand the risk profile, you can understand, we can actually be more lenient on traders with, the news time or with leverage or drawdowns or something else. Something that's really hard to do is to take on too much risk and then readjust it and say, actually, we're making it really strict. And that can lead to a lot of other issues. So I definitely think in the industry we're going to see more firms go under, people get stricter in the name of sustainability, and I think that's ultimately going to lead to a consolidation over the long term, which has already kind of started. And I think the other thing that we're going to see more of is diversification into other asset classes as well, and it's something we're looking into. So watch this space. We'll be doing more announcements in the coming months. But, we're seeing more people move into the future space to service more regions and different asset classes pertaining to futures. I think we're seeing a lot more interest in crypto prop firms as well, and we're going to see a bit more activity there. So yeah, I mean, ultimately there are some good things coming, maybe some bad things in the industry, but I do believe that in aggregate it's all for the long-term benefit of everyone. And again, I always compare it to the CFD brokerage industry a decade ago. Like I think it seems a lot more faster and rapid. I think because we're in a much faster age of e-commerce, social media, and faster feedback loops on Twitter. But we saw this like maybe 10, 15 years ago in the broker space. People could start brokers very cheap. There wasn't a lot of regulation. It was easy to get payments. A lot of bad actors, a lot of people who didn't know what they were doing, and a lot of people blew up. But out of that, the strong survived. The people that had their head on straight and made the right moves, thought long term and acted compliantly, are still around today, and a lot of them are the biggest brokers in the world. So and I believe it's going to happen in the prop space. I again don't have a crystal ball, so I don't know when or how, but yeah, those are sort of my predictions for the space. So we can check back in a year and see how wrong I got it. Yeah, we can see how we go.
Yeah, sure. And I couldn't agree, regulation is just, it's for the benefit of the trader. Because I always look from the trader's point of view. Obviously, our community is full of traders, and regulation can only help the trader, right? You're not going to have these problems with payout, firms blowing up, if the regulation is tight enough, because it's going to keep a lot of the less scrupulous players out of that space, right? And that can only be good for traders, right? And the sustainability that you speak about.
Yeah, and I think it would more so come around because obviously we know regulated firms, there's things around different leverage that you can do, like a stricter onboarding process to make sure the person's aware of what they're getting into. And like those are all things I think firms could with or without regulation, they could easily do. I think the big thing that's going to help traders in this space is stricter standards around capital adequacy and transparency. Most regulated brokers do trade reporting and ongoing capital adequacy reporting to regulators. And obviously, if a prop firm has to do that, they sort of have to very clearly have the liquidity to support any trading activity or payouts or things like that to make sure that they're liquid enough and not just misspending money or taking dividends for themselves, and then the firm blows up and they can't pay their traders. So I think that's going to be the best thing that we see out of regulation that specifically pertains to the prop firm space, especially because I think that is a very prevalent issue that's become apparent over the last 12 months.
Yeah, brilliant. Yeah, definitely. And guys, right now, as part of our partnership with Blueberry Funded, we're offering you 25% off any funded challenge right now using code SIMPLY25. I got it right this time. You'll see it below the vid, guys. All right. The trusted editor will put that in for us. And Marcus, I just want to, thank you for your time, and we're enjoying our partnership with you and the values that you have. They sort of, there's nice synergy with what we're about, and what we want to do is add value for traders, right? So, long may this partnership continue. And, thank you very much for a real, interesting, look into the prop firm space and the future of it as well. So, Marcus, yeah, really enjoyed the interview. Thank you very much for your time, and hopefully we'll see you again soon.